Welcome everyone to the U.S. Global Investors, the story of a unique company, an investment advisor that also has many types of different investments, and an undervalued stock with the opportunity for growth. So what's been happening with this? Well, if you take a look at our stock, it looks on April the 9th is 1184. But what's driving that? Because a year ago, at the bottom of the pandemic, the crisis of March 2020, March-April period, the stock was $1 a share. And then we started to climb. And the driver from that low happened to be predominantly JETS, the JETS ETF. And I'm going to walk you through why that was significant as a driver. So the average assets, as you can see at the end of December, were 2.9 billion. So that said they were up 45% on a Q-over-Q basis and 450% on a year-over-year basis. And that generated big revenue, which was 5.2 million. So that meant it was up 60% on a Q over Q, and it's up 480% on a year over year. And it's really easy to see, but that by the end of March, because our assets are public, the exact financials from that I'll walk you through, but the assets are still up again the next quarter of March. So the total picture of assets under U.S. Global are pushing over $4.5 billion at the end of March. So that means that from a year ago, they were like 500 million. So the total assets in the complex are up 500%. What does that mean in a revenue growth? That's basically going from something of $3 million to $30 million in revenue. And it doesn't all happen in a day, but as the assets grow, each day we end up getting incrementally another sort of a piece of 60 basis points. That income, as you can see, was 16.7 million, up 14.7 million on a Q over Q, and up 17 million on a year over year. Now, part of that income was greater than just operating income from JETS. It's because of our investment in the creation, co-founding of HIVE blockchain technology. Here we see that GOAU has surged past the competition on slide number 3. We're up almost tenfold from last year at the lows in March from the 2020, at the real sort of thrust of the beginning of the pandemic and the panic sell-off. And that's predominantly because of the growth in our assets. The JETS is so significant as an asset grower compared to, there's no one ETF or fund that T. Rowe Price, Invesco, or Wisdom Tree had that grew so significantly that it made an impact on the revenue and growth. This is another way of looking just at the stock price, not just the performance. As you can see, a year ago, $1, and then it's 10.79, and recently in April, it's even higher. Slide number 5, U.S. Global multiples versus the competition. So it's interesting for you is that Wisdom Tree is just a pure ETF fund group. Trades also NASDAQ, and you can see their price earnings is 21 and US Global is 4. So if we were to go to 21, that's a 5-fold increase. And I think it's just important for investors to look at that relative attractiveness. And if you look at Invesco, they're trading at 15 times. It's interesting because they have the biggest product they have in the financial world is QQQ. And you can see that they trade at a higher earnings multiple than US Global. So I think there's tremendous upside when we look at the valuations of what US Global is versus Wisdom Tree and Invesco. And I can give you the whole universe of the other groups. US Global Investors is known for pioneers in the industry. We launched the first no-load gold fund back in '74, founded the first no-load fund focused on the China region in '94, the first Eastern European fund. And we're well known for expertise in gold and precious metals and natural resources and emerging markets. And that's why we write about it every week with our investor alert. We also offer other 8 mutual funds and the only mutual fund in luxury goods and 2 ETFs. The biggest being JETS, second is GOAU for Go Gold. So we like to position ourselves by global trotters, which we've not been able to do in this year of the lockdown. But what's interesting is we've been doing all the Zoom calls everywhere in the world, but we have over the past 30 years, tremendous tacit knowledge from unique investment, meeting Jeff Bezos back in 1999 in San Francisco with a group of CEOs, and the sort of his vision for Amazon. Never did anyone think it would be the richest guy in the world, and just an incredible growth and success story. And that's another part of me I like to do, is to run marathons. Next week, I'm running the half marathon in Austin, but I've run many of them all over the world: Paris, London, New York City several times. So I truly enjoy visiting cultures, understanding them, understand the different business dynamics, and see if I can time it in that there's a half or marathon or a full marathon to run. Frank Talk blog turns 14 years old. Well, that's really amazing that how fast time flies by, no pun intended, with my Jets tie on. But it is amazing how fast time is taking place. And we're very proud about Frank Talk, and the Investor Alert, and the combination has 100,000 readers in over 100 countries. So here you see being interviewed from Fox News to Daniela Camboni at Stansberry Research now, or David at Kitco. And so we are global trotters, being on, trying to express what we see, both growth in addition to where the opportunities are. So what's driving growth? Surging assets, I'll repeat, in particular with Jets, HIVE blockchain technologies, and the airlines and gold. Over here, before you invest in any of these asset classes, I really encourage people to respect and appreciate the DNA of volatility, and recognize that each asset class has its own unique DNA of volatility. Interesting enough, gold bullion is less volatile than the S&P 500 over 1 day or 10 days. But most of the talking heads are always negative with bullion, when really it's not so volatile. Gold stocks are more volatile, and they're 3 times more volatile than bullion itself. So that's something that means basically that 70% of the time it's a non-event for gold to go up or down 1% in a day, and for gold stocks to follow up plus or minus 3%. And then we have Bitcoin and Tesla and Ethereum. And interesting enough, Ethereum has just surpassed Tesla, but for a long period of time, Tesla was the most volatile of all these emerging assets, which is important for investors to recognize. The suite of products: actively managed mutual funds, global resources, gold and precious metals, world precious, which invests in more junior mining companies, China Region Opportunity Fund, Emerging Europe, Global Luxury Goods Fund. Interesting enough, global luxury has outperformed the S&P 500, which shocks a lot of people. And then near-term tax-free, which is uniquely priced at around $2, so there's very low volatility, and it's ultra short, government fund or tax-free. In our 2 ETFs, Jets, it's a simple ticker, New York Stock Exchange, and GOAU, also on the New York Stock Exchange. And 2015 is almost 6 years ago, we launched the Jets ETF. It went from we launched it up to 100 million, fell back down in the crash of 2020, down to $40 million. Now is over 4 billion, and it went from trading 40,000 shares a day to trading 8 million. It has the complete, beautiful what they call the ecosystem of retail to institutional investors. That is from middles to whales. And then GOAU, we launched a couple of years back, and it's in its 4th year. It's the only precious metals mining ETF with an emphasis on royalty companies, and has a quant approach to picking its basket of stocks, and it's outperformed the other gold ETFs. Quant approach to ETF management, it's called Smart Beta 2.0. It's not just only factors that pick stocks, it's also the portfolio structure of using what they call mean reversion for 30 to 40% of the portfolio, and then looking for factors that say this is a very undervalued stock, or this has great momentum. And you can see the different factors we use to picking stocks. Jets ETF performance, it fell 62%. This is another inception of looking at what happened, falling 62%, and then the rally from the lows is up 125%. What I'm very happy to see is that this time last year, who kept buying were the minnows, and they were predominantly Robinhood. And we know from data that was available at the time that 25,000 millennials bought the Jets ETF. Buffett turned around and got negative at the beginning of June and said, get out. And from that point on, they rallied over 100%. So the millennials aren't dumb, and they recognize that the airlines always rebound. And we still don't have, Europe hasn't rebounded, or Canada, when you look at their economies, but compared to the US and compared to vaccines. So I think there's lots more on the upside of Latin airlines and airports, and the same thing with Europe. Now, record inflows into JETS ETF. This is showing you what happens on the cumulative net inflows of how the numbers continue to grow. And today, that number is over 4 billion. Overview of ETF revenue. This is what makes it so easy. So if you have $100 million in assets and you're making 60 basis points as an expense ratio, that means you get 600,000 in revenue. At 500 million, you have 60 basis points generating 3 million in revenue. At 2 billion, it's 12 million. At 4 billion, it's 24 million. So today, as of close, it's like $4.6 billion. So we're doing about 30 million in revenue because we also have mutual funds. The gold royalty model for GOAU is unique and very special. We like companies with high revenue per employee. And these companies, the royalty companies, have had spectacular growth. Franco-Nevada has far outperformed Berkshire Hathaway over the past 12 years. And same thing with Wheaton and Royal Gold. And then we're going to roll into, it's important, is a strategic investment we made almost 3.5 years ago. It started about 4 years ago, that we were trying to launch an ETF in Bitcoin and recognized quickly that the regulatory body was just not going to let it happen due to anti-money laundering concerns and KYC. And all this knowledge was going nowhere until the opportunity came to be launching the first public company to be crypto mining on an industrial scale. So I became the chairman. Now I'm the executive chairman. But at that time in 2017, we see at this company with $30 million. US Global put up $5 million. I put some money into it, and it was a raving success. It boomed and then it busted because it follows crypto prices, like gold stocks follow gold. Crypto prices of Bitcoin, Ethereum in 2017 soared to 19,000 Bitcoin did, and then it fell all through the winter of 2018. But most important is that we had accredited investors in that fourth quarter of 2017 trust us with $200 million, which we deployed, and we have the biggest footprint in mining Ethereum, which has been exceedingly profitable last year. Now we have a huge growth profile of a 300% increase this year in Bitcoin mining. So let me give you a picture of the sheer magnitude of the size of our facility in Boden, northern Sweden. In December, US Global, we realized we sold 10 million shares to lock in gains, but we reinvested them in a private placement of convertible debentures. Those debentures pay an attractive yield. We have the convertibility. So behind every share of GOAU, about 75% of it is a HIVE share. And so this really important to recognize that we don't have an ETF in a Bitcoin or the crypto space. We have HIVE, and I'm still the executive chairman. We as a company have a massive investment here, and we think the future remains very strong, especially with the announcement of Coinbase going public with $100 billion, PayPal starting to earlier last year, allowing people to use PayPal to buy Bitcoin, and then they could convert it to make transactions and buy a new TV, because Bitcoin they bought for when it was $5,000, $6,000, sorry, about $10,000, it was now $62,000. So HIVE blockchain, as you can see, it had a spectacular performance last year. It was up over 2,500%, but there's a good reason for that. We have the biggest footprint, in particular mining Ethereum, and we're the most profitable crypto mining company of all the crypto mining companies last year. And HIVE was also the most liquid TSX Ventures, the most liquid technology stock in Canada, traded 1.7 billion shares, ranked number 4 in the US on the OTC Best 50 stocks. In fact, it was ahead of the Bitcoin Trust by Grayscale. So it is traded 500 million shares. And this is another give you a visual of the outer performance of HIVE and how it was a significant impact to GOAU as an addition to JETS rising, giving us big operating revenue. HIVE is a huge capital gain for us, which we still have tremendous upside. In addition, we get an income paid monthly. But you can see that HIVE was up 2,500, far greater than Bitfarms or HUD-8 or Grayscale Trust. The record volume of 2.4 billion shares is because we trade both US and Canada and Germany. And you want to learn more about it, I highly recommend VOLATILITY. Lucas Schubert is a German analyst, energy analyst with Mercedes-Benz in Baden-Baden, Germany. He covers all the crypto stocks, all the public stocks, and every day does a YouTube story on them and explains to investors why he likes one versus the other. It's a great way to understand the crypto mining phenomena. This is another picture of showing you. You can see in blue, it's talking about HIVE, how we have such strong operating income and profit margin. And on the website of US Global, in addition to HIVE blockchain, I think there's some great short-term videos under 2 minutes, Metcalfe's law, why crypto prices are moving, and then tips on buying the airline stocks. Information that is both comprehensive and concise that's interesting for any investor. We're very proud at US Global that we've received and earned in a competitive arena with other no-load mutual fund families 90 awards for education. Last year, we launched the first luxury goods mutual fund, and it's done exceptionally well when you compare it to, say, the S&P 500. So we believe that GOAU is undervalued and gives investors access to a wide range of industries. So please discover NASDAQ, GROW, and sign up at usfunds.com for our weekly investor alert and Frank Talk. Thank you.